Okay, team, so we have CPI inflation data dropping tomorrow morning. It is an absolutely huge release. It's probably the biggest release in economic stuff that we get once a month, and it drops tomorrow at 8:30 Eastern Standard Time. Let's take a look at what to expect, what their expectational numbers are, and all that good stuff now. Okay, team, so if you don't know what CPI is the Consumer Price Index. This data is incredibly important. You know, when we do these live streams, we have a lot of movement in the markets from the economic data we cover. CPI is right at the top. Underneath that, maybe the only thing that can really battle that in terms of interest, in terms of market reaction, is Fed rate hike decisions and press conferences. Everything else is underneath CPI. It is incredibly important and relevant market data, and it's one of the reasons I haven't really been buying up too many swing trade stocks ahead of it, because I understand the implications of this where, you know, if we get bad data, the market could tank. And so regardless of how good, you know, some stock is right now, whether how extended it is or anything like that, I'm not buying up anything a couple days before CPI, because again, this can really influence things negatively and positively. And so let's take a look at what to expect. So the first expectation we have here is from MarketWatch. You can see for the big important CPI report, you can either look at the monthly report or you can look over the year-over-year report. The year-over-year report is generally my favorite, but it is subjective, I guess, and it depends on which report is, you know, just your personal preference. When I look at the yearly report right now on MarketWatch, they have the expectations at 5.5%, which is noticeably lower than the last report. I believe the last report was either 6% or 6.1%. It might have been 5.8%. Okay, so yeah, last time was at 6%, and so we are going down in terms of inflationary data again. And what the big thing to understand with inflation data is that lower is better. And so if we come in under 5.5% tomorrow, that will be a huge win for the market. The market will almost certainly move up, and the larger discrepancy between the expected number at 5.5% and whatever the actual number is will influence how much of a positive response that will be on the upside and how big of a negative response we'll get on the downside. And so that is something to understand, that lower is better. This is in terms of inflation data. And so the lower the data, the better it is. We want low data here. And so if we come in tomorrow at, say, 4.8% or 4.9% or 5%, that's still a very solid number, well below expectation. And again, that's something that we really want to see, especially in the time now where we have a lot of recession fears. Prices are still really, really high. And so we're in this weird situation between fearing inflation as well as fearing a recession with all the banking disasters that have happened over the last couple weeks. But the market's looking solid. If we take a look at the market right now, the market's actually been moving up pretty well. You can see the SPY today is currently at around 410, and this is being recorded on Monday. And so the market ripped up yesterday, and we'll see what it's doing today. But yeah, so far so good. I believe this will be an important thing to understand about this, though, is that there might be some extension on the upside heading into the CPI report. Again, I understood CPI was coming out, but I also thought the market might be a little bit extended on the upside leading into this. Of course, this is not investment or trading advice of any kind. I have no idea what I'm talking about. I might be wildly wrong about everything. Don't sue me. I'm not liable if you lose money. But yeah, the SPY is sitting right around 410s right now, and we'll see what it's doing today when, you know, I actually debut this video. But again, in my opinion, if you look at the, you know, a 10-day chart, for instance, the market's up pretty heavily leading into the CPI report. And so, you know, maybe there's some extension nuance there that could play, you know, factor into all of this. I'm not sure. But if we look at Bloomberg specifically here to see what they're expecting, Bloomberg is expecting 5.2%, so a little bit lower of an expectation for Bloomberg here. And again, we'll see if that plays a factor in this, whether, you know, we come in at 5.5 or 5.2. That's a pretty big discrepancy between the two major, you know, analysts and sites here. And so again, we'll see what happens. A 0.3% discrepancy between the expected number could be interesting to watch what happens. And again, this data all drops at 8:30 Eastern Standard Time tomorrow. And so we will be live streaming. We start our live stream super early, but we will be live streaming the data release as soon as it happens. You know, we get thousands and thousands of people tuning in for these streams because we cover the data incredibly quick. And so if you want to see the data as soon as it drops, hit the subscribe button, hit the notification bell, and we will cover it as soon as it comes out at 8:30 tomorrow. And so be ready, hit that subscribe button. Another thing that we also have coming out tomorrow that I wanted to talk about is the Fed minutes report. If you don't know what the Fed minutes report is, every 6 weeks the Fed meets to either raise or lower rates, depending on what's happening economically. The Fed will raise rates aggressively if inflation is really bad, which is kind of where we're at now. But the recession fears from the banking, crisis that we had a month or so ago does influence this data a little bit in this report some as well. But again, the Fed meets every 6 weeks, and then weeks after that meeting, after they raise rates and they hold the press conference, 2 to 3 weeks after that report, we get the Fed minutes report, which is just a little bit more detailed of a response on why they chose to make the rate hike decision that they did in the previous meeting. This next report drops on Wednesday as well, and it is known to move the market fairly heavily as well. With both of these reports coming out same day, this could be a really interesting day for volatility in the market. And yeah, it'll be really interesting to see what happens. Again, we will be streaming as the report comes out. We will show you the market response and the reactions to this report. But yeah, we just have a lot of economic releases after a fairly slow couple weeks. And so it should be a really fun day for volatility tomorrow. What I will say, guys, is that if you are in any positions, if you're day trading tomorrow especially, be sure to understand the volatility that comes at 8:30 when CPI comes out, as well as be sure to understand the volatility that might come for 1 p.m. tomorrow or 2 p.m. Eastern Standard Time, because that should move markets as well. It'll move the SPY, the S&P, the Q. Most blue chips will react to the Fed minutes report as well as very heavily to CPI. And so again, just be careful. If we get some extension on the downside, maybe I'll buy up some stuff on a short-term swing trade or something like that. But it really just depends on the day. And yeah, we'll see what happens, guys. If you haven't already, hit the subscribe button, hit the notification bell. I appreciate all the love and support. This channel has grown massively over the last year, and it's been really, really fun. We got our check mark and everything. And so thank you guys so much for this community. We really just want to build a free resource and community of traders where we don't sell a course, we don't sell a service, we don't claim to be experts or even good traders, and we just cover, data for free and break the market down for all traders. And so, hey, hit the subscribe button. Good luck. We'll see you guys tomorrow. Be safe.